Buy Defaulted International Bonds by www.profitableinvestingtips.com. There may be a new investment opportunity in the international bond markets. If you have a high risk tolerance in pursuit of stellar profits, you might want to buy defaulted international bonds. Your first thought may be that it will not take a lot of fundamental analysis to determine that defaulted bonds in a foreign country may be a really bad investment choice. Normally, this would be the case, but an item in the business news indicates that in the future it may not be such a risky proposition to buy defaulted international bonds. At issue in the current situation are the bonds from the country of Argentina. Argentina defaults on $100 billion in debt. Argentina defaulted on about $100 billion in debt, denominated in US dollars, in 2001. Many, if not most, of the bondholders were offered bonds with a substantially lower value, and they agreed to the deal. They retained some value and have been receiving payments ever since. Those who refused the offer had bonds that were worth cents on the dollar, if that. Now, a number of large hedge funds are suing in U.S. courts to have Argentina pay in full on their defaulted bonds. The hedge funds won in a lower court and now have had the decision upheld by a 3-judge panel of the U.S. Court of Appeals. It remains to be seen how these hedge funds would collect even if they win. But it also remains to be seen how any foreign country could offer their bonds to U.S. investors in the future if U.S. courts determine that when U.S. investors buy defaulted bonds that they can be eventually paid in full. Defaulted bonds were not one of our 3 great foreign investments ideas, but with enough risk tolerance and the potential for huge profits, one might buy defaulted international bonds if the price is right and the profit potential high enough. Investing offshore. Successful international investment strategies include investing in foreign stocks, foreign real estate investments, setting up the management aspect of a business in a tax-friendly locale, setting up shop for one's entire business offshore, buying bonds, and more. With any of these international investment strategies, one ought to consider access to markets, manpower needs and costs, access to appropriate technology, and growth potential. And in the case of bonds, one needs to consider the ability as well as the willingness of the government in question to pay its bills. Slower emerging nation economic growth. Coming out of the 2008 Great Recession, Asia was the engine of growth while Europe wallowed in recession and the USA slowly improved. Growth seemed to be the province of the BRICS nations: Brazil, Russia, India, China, and South Africa. We noted some time back that when value investing for long-term profits, going where the growth is the beginning of a good strategy. Now, however, India, South Africa, and Brazil are all seeing substantial slowing. China is flirting with a real estate bubble. Intrinsic value of overseas investments is the same as in the USA. The value of an investment hinges on its forward-looking income stream. As slower growth hits the BRICS nations, there could be more opportunity to buy defaulted international bonds. If this interests you, make sure that the price is right and that someone with deep pockets is footing the bill to take the issue to court. For more information on investments or investing tips, visit www.profitableinvestingtips.com.